welcome to another Smaulgld live stream. It is Saturday, the 25th of May, 2019, and it is Saturday Night Silver with Smaulgld. Welcome, mug stackers and game changers. Tonight's topic, stock to flow and silver. Now, I was on, about a month or so ago, the SGT report, and the question came up. I think he said, Lewis, how do you explain this out of whack gold silver ratio, which I've constantly been talking about as being unsustainable? And I explained at the time that I didn't think that the gold silver ratio was out of whack because I've been doing a lot of thinking about it. And generally, if something is out of whack, it doesn't stay out of whack for a decade, 2 decades, 3 decades, a century. There's generally some rationale behind why things are a certain way. I mean, yes, things can be, according to Keynes, things can remain irrational longer than you can remain solvent, but it's generally not generations. And the gold-silver ratio has been elevated really ever since they demonetized silver and removed the bimetallic standard, which was set at 16-1. Now, we're not going to get into that, but the rationale that I gave at the time was that there were different demand profiles for both gold and silver. And at the time, I was talking about the gold demand being about 45% investment and the rest jewelry and some industry, and that the silver demand was mostly commodity and then jewelry and then silverware and then investment. So that the monetary component of silver was much lower than gold and therefore was not as prized in an economic crisis as part of its overall demand profile. Now, what I didn't talk about at the time was supply. This is why we're going to talk about the stock to flow ratios. Now, gold has a very high stock to flow ratio, and you say, what is a stock to flow ratio? Well, it's basically how much above ground stock there is divided by how much is mined in a given year. And for example, with gold, there's about 170,000 tons, and they mine about 4,500 tons of gold each year, which means you're only adding single-digit percentage amounts of gold to the overall stocks every year. Now that's a good thing, as Bernie would say. Now why is that a good thing? Well, it means that you can't get inflation in the price of gold. You can't get deflation in the price, depends how you look at it. But if you add with dollars, if you add more dollars to the money supply, you're devaluing the dollar. That's what QE was, and that's the textbook definition of inflation. Now with gold, you really can't add that much gold to the money supply or the gold supply to the stock because you have limitations on the amount that you can mine in a given year. And those are constrained by price and available places to mine for gold. So gold has a very stable price as a result of having a very high gold stock flow. The stock flow ratio for gold is very high. And one of the things we talk about when the pumpers mention, oh, there's going to be a gold shortage and they're going to shut the mines down. And I've mentioned that that is not going to harm it's not going to impact the price because the amount of gold that's added each year isn't that much in the overall scheme of things anyway. So what happens with gold? If the price rises, then you're going to get increased mining. Why? It's going to respond to the extra demand, the higher price, and miners will say, well, it's time to increase the mining production because we can get a higher price for our gold. And it's somewhat of a self-regulating price mechanism. They would say the best solution for higher prices is higher prices because as prices get higher, what'll happen with gold is the jewelry component will drop off. So if you have some type of monetary issue where the demand for gold is rising, Miners will see that. They'll respond to it. They'll print more gold. They'll mine more gold to meet the higher price, and they'll be able to afford to mine more gold. But as the price rises, the jewelry component of gold will diminish. People will hold off on buying gold. It'll become a luxury good, and they'll just have to either get a smaller ring or no ring at all until the price comes back down. Silver, on the other hand, it's an entirely different story. And here's why silver has a much less stable price over the years and has less of a probability of remaining stable. And here's why. So we mentioned that the silver demand profile is largely a commodity one. Now, for commodities, the amount of silver that is produced every year is clearly enough to meet the commodity demand. So the stock-to-flow ratio for silver is much lower. Some suggest it's around 25-1 as opposed to gold is about 65-1. That doesn't mean that there's a lot of above-ground silver. It just means that the amount of above-ground silver and then the amount of production that they have, you have a lower ratio. And if there's enough silver being mined to meet industrial production, then there's not an issue. Now, where silver can skyrocket and does this spike and dive once in a while, and it's only done it twice since 1970. It did it in 1980 and it did it in 2011. Is when it picks up an additional monetary bid, which doesn't exist for most of the time. Silver's monetary demand is only 10-15%. But when you have a financial crisis or a massive inflation and people start to use silver as a substitute for monetary gold, then silver will rise. Now, I mentioned it only happens twice is because in general, despite what you want to hear, you want to say that silver is money, period, it's been money for 5,000 years, it's not. It could be used as money, but the point is the market does not view it as money. I don't care about semantic definitions or debates I've had with David Morgan. You can debate all that stuff to the cows go. It doesn't really matter. The point is the market does not buy silver as a commodity. The only people that buy silver, as a monetary metal, are people that buy silver as a monetary metal, but they do not make up a large portion of the market. As I mentioned, monetary silver demand is 10-15%. Now, here's where it gets trickier for silver. We mentioned for gold that when the price rises, you will have miners ramp up production to meet the extra demand and the higher price. And when the price goes down, they may slow production because it doesn't make sense for them to mine. Silver, in a sense, is kind of screwed because while silver miners may want to cut back on production, and we're going to hold that off for a minute, they don't for a different reason. But here's the problem when the silver price falls. You would think that it would be self-regulating and that less than silver would be mined, and therefore it would moderate itself out, meaning the price is falling, so we produce less silver, and then the supply-demand dynamic gets back into whack, and we're not worried about it anymore because, yes, less demand, but then less silver is getting produced. But there's a trick to silver. 70-some-odd% of silver is not mined by the dictates of the silver market. So the price of silver can be falling, as we've seen in the past 5 years, but the amount of silver mined has increased. Now, that's counterintuitive. Well, it's because most of the silver coming to market, that extra silver, is in response to increased mining for gold, tin, copper, zinc, aluminum, etc. Because silver is used or is mined as a secondary metal for many primary base metal and gold mines. And therefore, the silver dynamic doesn't work. Gold, it kind of works perfectly. You've got this large stock of gold, 170,000 tons, and you've got this ratio that's very high because it's like 65-70-1 because you don't add that much gold every year to the stocks. and the good portion of the gold demand is a monetary store of value base demand that you have there in the form of investment demand. And then even a good part of the jewelry demand is investment as well. So you have this concept of a very stable dynamic. You have a large stock, that's the stock, and a relatively small flow, the amount that's mined every year. Now, with silver, you can have increased flows even though the price is going down. So it's not even going to self-regulate. It's actually going to make it worse. The price of silver is going to go down further because more and more silver can be mined even though the price is going down. The other thing is, because silver is mostly a commodity, when the price rises, and we haven't seen this yet, the best bet for a silver spike is a combination of a commodity demand spike coupled with a monetary, and this is why it doesn't happen very often. It has to, it can either be an explosive monetary demand, or it can be in conjunction with some type of mining shortage, which we haven't had in the last 30, 40 years, with also a commodity increase. So, for example, palladium has taken a massive rise, and none of that has anything to do with stock flow, has nothing to do with monetary component of palladium. It simply has to do with an increase in demand and a stable supply that doesn't make up the demand. That's very simple. Now, you would think, well, silver could do the same thing because silver is so useful in our lives. It is used in yoga pants. And, yeah, okay. But you have to realize that silver is a much bigger market than palladium. If palladium is moving higher on the basis of car production, and it's the one thing that they need for cars, and they're not going to stop making cars, and they make millions and millions of them a year, you can see how that is a commodity strain. Silver's use in electronics, not that it can be substituted, but we've seen that there's not an increase in the overall demand for silver, even though the amount of devices are increasing. The devices are smaller, so we've seen an actual decline in the demand for silver for electronics. So that isn't going to drive, or hasn't driven, the demand such that it's going to overwhelm the supply. The other big driver for silver is going to be solar panels. Now, what happens with solar panels is, yes, we're increasing the number of solar panels every year, but we're not really increasing the amount of silver because of thrifting. They're figuring out ways to use less and less silver in each solar panel. Now, compare when you have that dynamic with when there's a demand for gold or silver for monetary. When there is a demand for monetary gold, there is no substitute. Fiat currencies are collapsing. There's an EMP. There's some dramatic issue. You have to have the gold. Now, in some instances, you may have to have the silver, in which case that would be good for silver, and silver would rise along with gold. But if it's a commodity shortage, that can be dealt with either by they increase the mining production, or they thrift, or they substitute. Now, you can say that there is no substitute for silver. Silver is the most conductive, the most reflective. All that is true. But you can substitute silver in a lot of places. In fact, gold is even better, not for conducting electricity, but for not tarnishing in electronic components. And the point is that a commodity shortage can be alleviated, whereas a monetary shortage really can't. That's why you can see literally gold and silver skyrocketing in a monetary crisis. However, the point is that silver does not have that same monetary component that gold has. Now, that's what I was saying on SGT Report, and everyone's saying, who is this guy? Because they've been brainwashed into thinking that silver is gold, and that gold is money, and that they're both the same, and that, therefore, this doesn't make any sense. Well, it hasn't made any sense for the longest time because that's not the case. Silver is not money. Gold actually is, to a certain extent, because of Basel III, because central banks hold it. There is a monetary component to gold, and because investors boost the price of gold, boost the gold demand, and a part of the jewelry demand. It's mostly, if you take gold and jewelry together, investment jewelry, it's the bulk of gold demand. There is some demand for gold in electronics and other industry, dentistry, and so on. But the real purpose of gold is as money, so to speak. Now, because of that, that gives it the stability, and it's the demand for money. And so the stock to flow ratio is very high, which means there's always gold available. It's just at what price compared to the fiat currency, because gold is seen as a monetary asset, whereas silver, not much of it is monetary, and that's why you don't get this. You don't see silver spike as often as you do see gold. So gold over the course of time may go up many years, and silver may not. We've seen that in the past 15, 20 years. Silver every other year goes down. Some years, 3 or 4 years in a row. Gold doesn't do that. We've seen gold has only had 1 year in the past 30 or 40 years where it went down over 25%. Silver's done it like 5 times. Silver will collapse and gold won't. And that's part of the reason is the stock flow ratio is much higher for gold than it is for silver. Now, I would be remiss if I didn't bring into this, and this is not a comparison of Bitcoin to gold, because I do not think that Bitcoin and gold are the same. In many respects, they're not. However, in this respect, they are the same. And this is something I think it's hard for people to understand, that something with the normal view of money is it has to have had pre-existing value, i.e. intrinsic value, and therefore people are willing to accept it. So gold and silver were desired as commodities before someone figured out they can be broken down into component parts, struck into coins, then they're fungible and durable, and we can use them as a medium of exchange. People were using gold, they were fascinated by it, silver to a lesser extent, they were making stuff out of it, they were ornaments, it was desired, it was rare. Makes sense. And that's how commodity money comes about. There's already a pre-existing value or demand for the commodity, gold or silver. Bitcoin has no such demand pre-existing. There's, as Peter Schiffel says, nothing you can do with a Bitcoin. You can't make cufflinks out of it. No one wanted a Bitcoin before it was invented. In fact, it was invented and thrust officiously upon us, meaning that no one was demanding Bitcoin. Now, people may say, well, they were demanding some non-fiat money that you can print forever. Well, you already had gold and silver for that. And the difference between that, this is the very big difference. Not only was Bitcoin not desired before it entered into this, it was a payment system from day one. It wasn't anything before that. You don't follow the regression theory of money that it goes back to when it was valued for itself, and now it's valued as money because it's a medium of exchange. That's exactly what happened with gold and silver. Bitcoin comes out as a payment system. Now, that means that's actually a feature, not a flaw, for money. Now, hear me out on this. A lot of people say, well, no, it's not money. It can't be money. Here's why it is. None of this is investment advice. This is only one way of looking at valuing gold, silver, and Bitcoin on the stock to flow mentality. There's so many other things. I'm just throwing this out there. But here's the difference between gold, silver, and Bitcoin. Gold, we know, has a different demand profile in that it's more monetary than silver. Silver's is more commodity. It also has a different supply profile, meaning the gold supply will change and adapt to the price of gold. Gold price goes up, miners will mine more. Gold price goes down, miners may mine less. Silver doesn't react to price as much because 70% of the supply of silver comes from mining of other metals, which may or may not have the same demand profile as silver, and they don't. So you may get an increase in silver production as the price is falling, or if you're lucky, you might get a decrease in silver production when the price is rising, but that hasn't happened recently. So now you see the two metals have different demand and supply profiles. Bitcoin is unique in its supply profile. The demand profile, unlike gold and unlike silver, is 100% monetary. As Peter Schiff says, you can't make cufflinks out of it. There is no use to have a Bitcoin whatsoever. I don't believe this store of value nonsense because it's nothing there to store. If Bitcoin is a payment system, then Bitcoin is desired for its properties that you can transact in Bitcoin. That's the main reason you have it. Because if you can't do that with it, what are you storing it for? You're going to make cufflinks out of it? No. You're going to make silverware out of it? No. There's nothing you can do with a Bitcoin. Now, that's not a denigration, though. The point is that because silver has so little monetary value, and that upsets people when I say that, but it's fact. The bulk of silver goes into silverware, jewelry, and solar panels and electronics. It doesn't go into investment coins. Because Bitcoin is 100% monetary, that means that its demand is going to go higher if, and this is a big if there's a demand for a monetary substitute to fiat. So, and we don't know if this is the case, but here's why it might be. We've already seen that when we have fiat crises or other crises that make people move into the metals, that's going to boost the price of the gold. And eventually, if gold gets really high, then silver will get that monetary boost as well. Well, the same is possibly true for Bitcoin. Now, Bitcoin has only a monetary component. It has no jewelry, it has nothing else. If there is a demand for Bitcoin, just because, it could be for other reasons. It doesn't have to be because of financial crisis. It could just be because more people are using it, more people want it. Some people may be misguided and think it's a store of value. It doesn't matter. Whatever they want it for. And remember, because I say it's not a store of value, it doesn't mean it's not. It just means that's my opinion. But the point is that people will buy Bitcoin for whatever reason. And if they buy it, they're only buying it, even if it's a store of value, it's still a monetary component. There's nothing else you're doing with it except having it for itself. Like, whereas gold, you might have it to make it into jewelry, or silver, you may have it to stick it in a solar panel or a cell phone. Because of that, because Bitcoin is 100% monetary, that actually means it can catch a higher bid than gold and an even higher bid, obviously, than silver. But here's where it gets interesting. Whereas gold will adjust, the miners will adjust. The miners will mine more gold when the price goes higher. Makes sense for them to do it. The primary silver miners may mine more silver when the price goes higher, but the secondary supply, the ones that are mining for aluminum, copper, tin, whatever else, zinc, they're not going to respond in any particular way for silver because it's a secondary or maybe even a tertiary concern of theirs how much silver they get from the mining of the other metals. Here's where Bitcoin gets interesting. If there's a demand for Bitcoin, whether it's a excessive monetary demand for a crisis, which may or may not happen, or just increased use and adoption, you say, well, the price goes higher, they're just going to mine more. Wrong-o star. They can't mine more. This is why the halvenings are very important in Bitcoin. If there's only a limited number of Bitcoin that can be mined, that means to date there's a certain amount that has been mined. That's your stock. What's your flow? Your flow is going to be how much Bitcoin is mined in a given year, and it's set how much can be mined. Every 4 years, they cut in half the amount of Bitcoin you can mine. So currently, almost all the Bitcoin has already been mined. And next year, they're going to cut the amount that'll be mined in half. And it just goes out. It goes out like 50 years. I don't know how many. It goes out for a long time where you cut off half and half and half, which means that the stock increases very little and stays pretty much constant, but the flow becomes almost non-existent. Now, the problem with that, well, it's not a problem, but what that does for price means that there's only a certain amount of Bitcoin that can be purchased or traded. There's only a certain amount that's out there, and that's the 18 million that have been mined already, give or take. It's a little under that. Plus, there's been like 3 or 4 million lost. it's never going to increase higher no matter how high the price goes. It's not like all that does is incentivize the miners to mine the limited number of coins they can get, but they can't mine more. And that's why I was thinking today, you hear all these ridiculous price targets for Bitcoin. You say $1 million. So that's ridiculous. How's it going to rise that fast? And what would be the impetus? The impetus is that there's not any additional coins that you can bring onto market. And if the demand continues to increase, it doesn't even have to increase exponentially. You just have to have what you call a certain amount of hodlers, which is what you have in gold. Gold is hoarded. Physical gold is hoarded. Those 170,000 tons are mostly there's not a lot of trading in gold, and there's a lot of paper trading, but the actual physical gold is not moving around very much. When people buy gold in India or China, physical gold buyers hold on to it. Bitcoin, same thing. A lot of them, they're called hodlers. They hold on to it. So if you have additional demand next year, 2 years, 3 years from now, you're not going to have additional supply coming on market. So that's another reason why you can't even say Bitcoin is digital gold. No. Gold, you can increase the gold supply. You can find new gold. You can actually spend more money to mine gold that might cost you $3,000, but if the price is $4,000, you're going to have at it. There's nothing you can do in Bitcoin to increase the supply of Bitcoin. And it's the same thing with Litecoin. Litecoin is basically 4-to-1 Bitcoin in that there's 84 million Litecoin to be mined, and Litecoin is going to have what they call a halving in 74 days. So it's the same thing. You have this increase possibly in demand, but you don't have the ability or the actuality of having more Bitcoin or Litecoin being mined. So that's your stock flow, and it actually, when you look at it, it has always favored gold over silver, especially since silver has been demonetized. And it's possible that it favors Bitcoin even more because gold has a non-monetary component to it. So some might think, well, that just shows that gold is more valuable. And they say, whoa, hold on a minute. That means silver is even more valuable because silver has even more uses than gold, because we got the solar panels, we've got the yoga pants, we've got the electronics, we've got medicine. Silver is so useful. Yeah. But the monetary part is very small in that. And I think that's where the big difference is between gold, silver, and then even Bitcoin. What remains to be seen is whether Bitcoin has monetary staying power. We've seen gold does. And we've seen silver has kept some of its monetary staying power. But the bulk of silver has moved into. Remember what Kennedy said in 1962? He said, silver is a very valuable commodity. And it has no monetary use other than for making coins. And they don't even use that anymore. So that's where we are right now, I think, with this stock float. Pretty much explains a little more clearly my reasons for the gold-silver ratio being so high based on the supply-demand, different profiles of gold and silver. This actually puts a little bit of numbers around it when you take into account what are the overall stocks of gold, the overall stocks of silver, the overall stocks of Bitcoin, Litecoin, and what are their flows, what are their mining amounts that are added each year. Gold can never, the good thing about gold and silver is even though you can increase the amounts, you can't increase them exponentially. Price of gold, let's say gold doubles, they can't double gold production. They might add another 2% or 3%, but they can't really pile on that quickly and find that much gold. The problem with Bitcoin is if it doubles or triples, the mining supply actually goes down just as a function of time. As you go on, they mine less and less of it. All right, let's see what you guys are thinking about this whole stock flow concept here. I hope I explained that. If you got any questions, let me know. If you want my attention, you got to put Smaulgld, Smaulgld, and I will see it. And if you've enjoyed this, please consider supporting the channel through various ways. Some of the ways are you can buy all your gold and silver through the site, Golden Eagle Coin, Money Metals Exchange, and SD Bullion. And if you click on the links below this, BitChute or YouTube, or go on the Smaulgld site, Smaulgld gets a small commission, non-investment advice to buy gold or silver. But if you're going to, you've done your homework. You pay no more, no less than if you visited those sites directly. So please consider doing that or supporting the other affiliate links on the channel. We've got coffee and emergency food. And of course, we've got the famous Smaulgld mugs. You can buy those directly from the site or visit the Smaulgld store and pick up all types of Smaulgld branded items. Or you can make a donation to Smaulgld one time via PayPal, Litecoin, Bitcoin. Or you can become a Smaulgld patron. Or you can join one of the mug clubs on Subscribestar. So please consider doing one of the above. All right, let's see what the comments are here. I'm just looking for the page. I'm going to put up the page. Or you can even send items of value or even notes to me at Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. And there it is, all up there, your Smaulgld mugs. Game-changing mugs. All right. Coins AZ is here. He says, hello. Philip Quinn is here. Hello. Prashanti Girl. Hello. Sean Mahoney. Yo, Big Lou, what's up, baby? He says, all right. Ken Singsta, greetings, muggers for life. We mugging for life, and we mugging for truth. Roger, good day, Roger, good day. He's there from Australia. Fresh off, I'm sure, binge watching the Truther videos on YouTube. All right, continue. Great show as usual. Big picture question. Why have you chosen gold, silver, crypto as a topic to talk to people about? Oh, that's a long story, but that's what I've been doing for a while now. And I think they're all related. I started actually with the ultimate hard asset, which was real estate. And then I moved into gold and silver. And then I moved into economics and crypto. So that's pretty much what I've been talking about. But I think that this stock to flow ratio is very instructive for gold, silver, and cryptocurrencies. And I also talk about mugs, which is also a hard asset. Mugs can never go to zero. Mugs are drinking vessels, period. Max Strong, I'm listening while I clean, so I can't chat. We're missing out on Max's contributions to the chat bar. Scotty O, so if demand for copper goes up from wiring, electric vehicles, power plants, would that act negatively to silver price since there would be increased byproduct mining? Good thought there, Scotty O. That's right, it could. But on the flip side, demand for silver may also go up for electric vehicles, power plants, and so on. So it could be a wash. But that's exactly the way you have to look at it, Scotty. See, the problem with the silver pumper channels and the gold pumper channels, they just tell you things like silver is rarer than gold. Central banks are buying gold. That is all I need to know. They just robotically tell you a cherry-picked fact. They don't do the analysis. How much silver is required? We could not lead our lives without silver. Silver is used in electronics. They're using more electronics every day. Solar is going to explode. But they don't talk the numbers. They don't look at the numbers. They don't look at the demand numbers. They don't look at the supply numbers other than to tell you, there is a silver shortage. There will be no silver left at any price. Again, I understand why that's attractive to people. They want to have reasons why their favorite asset's going up. Hey, look at this one today. I tweeted this today. Now, at some point, you would think that maybe after 10 years of touting silver as being the most important thing, the thing that's going to skyrocket, greatest wealth transfer in history, the gold-silver ratio is unsustainable, JP Morgan's buying silver, all this garbage that you hear, you might think that there might be a revisiting of some of these narratives. No, 10 years on, repeating the same thing, COMEX default, gold-backed yuan, game changer, game over. It's all designed just to get you in. Here, and maybe they still believe it. I don't know. But the thing is, if you believe in something like the Great Pumpkin and every year it doesn't come, you have to wonder and start asking yourself, why hasn't it come? And there's so many ways of looking at it, but they don't look at it. They choose not to look at it. But look at this one. I found this one today. I love this one. This one is telling us that you're going to be able to buy a single-family home with a monster box. Yes, 500 ounces of silver. And here it is. This was from November 2010. Watch the whole video. $500 an ounce to buy a house. Mike Baloney. Silver versus real estate. So there you go. Every so often, silver does an accounting. You know, you repeat the same stuff, and everyone says, "Oh yeah. Thanks for educating us. Thanks for telling us this, Mike. What will we do without you?" You would have invested in silver, maybe. I don't know. But again, this is what you get: is these narratives, and it's not like they're not based on some fact. It's not made up. But the thing is, if you have a theory or a thesis, and you throw it out there, and it doesn't happen for 10 years, and you just keep repeating it, and then you're moving into the Einsteinian world of repeating the same thing and expecting different results. Sorry, I get off on this once in a while. All right, Prashanti Girl is working. Let's see. Roger Henley, are you working or survival preps for the coming dollar collapse? Yeah, the other one, the currency reset. Ann Holloman is here. Hello, Ann. All right. Let's see. Chuck Morris. If silver isn't considered a serious competitor to fiat money, it's not. Why does J.P. Morgan keep such a lid on it? Who says they do? They make money off of that. See, this J.P. Morgan thing is also a combination of just misinformation, disinformation. J.P. Morgan's buying silver eagles. There is trading in all commodities, and they manipulate all of them. They manipulate them for profit. It's not just gold and silver. What's interesting, though, this what really confuses people that follow gold and silver is, for whatever reason, they try to tell you gold and silver are not manipulated. Of course they are. All the commodities are manipulated. They pay fines on this all the time. In fact, if you stick with me here, I was going to show this the other night, but I saw this from, he's a good follow on Twitter. What's his name? I must have done it as a Haverstein, or whatever his name is. He published this chart showing the amount of money. I had only known about J.P. Morgan. I had compared that J.P. Morgan over a 7-year period paid $40 billion in fines, and that's like 3 times more than a year's annual supply of silver mining. But what he was showing was that, these numbers are staggering. See if I can find it here. The Bank of America, $75 billion. Why can't I find it now? If I can't find it, I can't find it. But the point is that there's no special attention on silver. What happens is when you listen to silver pumper channels, they make it sound like everyone's thinking about silver, like China. Like everyone in China wakes up, because they are smart. They like gold. And everyone in China is walking around thinking about when they're going to get their next ounce. And that's all China thinks about, is rolling their gold out into a stadium and saying game over, game changer. That's the problem when you listen to specific channels. Imagine if there was a channel dedicated to copper. There isn't, but just substitute copper every time you hear silver. Then you realize how moronic some of these channels are. All right. Oh, but silver. All right. What else? Roger, you guys are chatting amongst yourself as you always do. That's fine. Okay, Chuck Morris. Your explanation tonight was very helpful. Oh, thank you, Chuck. Chuck, here's the thing. Instead of trying to consider and insist that what they're telling you is correct, start questioning what they're telling you. First, determine, are they giving you the facts? Most of the time, they are. But the second thing you have to do is, are there any other facts? Are there any facts that support this, contradict this, or make what they're saying irrelevant? And oftentimes, it's all of the above. And some of the times, it's just made up. Not very often. I don't want to go into the examples that just make stuff up, but that's why I think people have lost the ability to analyze stuff, because every one of the channels repeats the same thing. J.P. Morgan is buying silver. J.P. Morgan bought all these silver eagles. No, they didn't. There's no. I remember when I was talking to Sean on SGT Report, he's like, oh, yeah? And he shows me, well, he didn't show me, but he shows on the video some article saying that J.P. Morgan's buying silver. Yeah. And because every silver pumper and gold pumper repeats the same story doesn't mean it's true. It's the same with the gold back yuan game changer. They all ran with that story. I was the only one who's saying this story is not true. There's no source for the art for the concept that China is going to do a gold back yuan. Oh, you'll see. And then Mike Baloney did that. He actually called me out on one of his videos. His video was called The Game Changer for Gold. And he was explaining that this was going to happen and that they were going to sell their oil for Chinese yuan. And if they didn't want the yuan, they just bring them right back to the Shanghai Gold Exchange and get gold. Like, that was never going to happen. The Chinese never said they were going to do that. And I said it didn't make any sense for them to do it. They weren't going to do it. And that story was unsourced. And he calls me out in the video. And he says, oh, there's a guy here in the comments that's saying there's no source to this. Oh, you want sources? And then he shows stories, just stories that have no source. And again, people think, oh, because this guy is the expert and he knows it must be true. It's a common fallacy. I think it's called argument ad authorem, whatever. You don't need to know the name of the Roger did not like my Aussie accent. I wasn't even trying. He wants me to stick to Bernie. All right, I'll do the rest of the night in Bernie. So what do we got here in the comments? How come I always get the impression that Smaulgld is mocking Chris Dwayne? Well, I don't think that Smaulgld is mocking Chris Dwayne at all. I think that Chris Dwayne has his own point of view, and he sells his coins, and they are silver. They're not really coins, because Lewis informs me that to be a coin, it has to be issued by a sovereign entity. Roger Henley. Mike Maloney gets high on his own supply. Coins AZ. Smaulgld. Maybe it's not supposed to be a short-term theory the pumpers are spouting. Maybe the theory is a 100-year theory. Well, that's possible, but I don't know what good that does for you in your life when you don't live to be 100. Nominal Egg is here. That's a great name. Max Strong. Let's see. All right, looks like we have no more comments, so it's time for me to say goodnight on behalf of Lewis, and maybe I'll turn it. Lewis, do you want to say anything else to the silver stackers, the mug stackers, the gold stackers, and the Bitcoiners? Yes, I will. All right. Fortunes and formulas, copper is in everything. Yes, you can make that argument. Copper is so useful in our lives. Copper bullet, copper shields. Actually, copper makes better bullets than silver. You can go through all of that. Copper's still money. There's copper and nickels right now. 75% of a nickel is copper. Most coins in the world still have copper in them. Copper pennies, yes. Anyway. All right, everyone. Well, I'm going to thank you for joining me tonight. I want to thank Bernie for joining me and all of you for joining me. And we will see you tomorrow night. Will be Solid Gold Sunday with Smaulgld. Then Monday we'll get back to the normal programming. Monday is, you know what Monday is? Monday is Monday Muggin' for Life. And because it's Monday Muggin' for Life, and you may not be able to wait for Monday to hear this, so I'm going to play it for you now. Another original song by Mark Battaglia, and it is called Smaulgld Mug Life. Here you go, and have a good night.
Yeah, Mug Life, baby. Mug Life, baby, yeah, we rockin' the booth. We're mugging for life, we're mugging for truth. Smaulgld here, and we spitting the facts about the pumper community and the way that they act. We're mugging for life, we ain't playing the games. We all know the lies and we all know the names, come on. Mugging for life. Mugging for life.